If you walked into Dragon's Den and you didn't know your numbers, you'd be in serious trouble. Hi, I'm Marie from Next Steps for Business, where we help small business owners with practical support to create calmer, more profitable businesses. Investors don't ask about numbers because they love spreadsheets, because most people don't. They ask because numbers answer very important questions about a business. Is it making money? Is it growing? And is it sustainable? Now, you might not be pitching for investment in your business, but those are still exactly the same questions you should be able to answer as a business owner. The good news is you don't need to understand complicated financial reports to do that. You just need to understand a few key numbers. A lot of small business owners avoid looking at their numbers. Sometimes it's because they feel confused or overwhelmed, and sometimes it's because they think they should understand them, but they don't. And sometimes it's because they're worried that the numbers might tell them something they don't want to hear. But avoiding your numbers doesn't protect your business. If you don't look at the numbers, how do you know if things are working? How do you know what needs adjusting? Numbers aren't there to intimidate you. They're there to give you signals about what's happening in your business. Investors use numbers to understand three things about your business. Is the business making money? Is it growing? And is it sustainable? Those questions are exactly the same whether you're pitching for investment or simply running your own business. And the good news is you don't need to understand dozens of complicated financial metrics. You just need to understand a few key numbers that answer those questions. The first one is revenue. You might also hear this called sales or turnover. All three mean the exact same thing. Revenue is simply the total amount your business sells. This number tells you the size of your business and whether it's growing. For example, if your revenue last year was 150,000 and this year it was 170,000, you can clearly see the business is growing. Revenue also tells you whether there's a demand for what you sell. But revenue on its own doesn't tell you whether the business is actually making money. That's where the next number comes in. The second number is gross profit. Gross profit shows you whether the product or service you sell is actually profitable. The simple calculation is sales, take away direct costs equals gross profit. Direct costs are the costs directly involved in delivering what you sell. For example, materials, products, or production costs. If you run a service-based business, you may not have many direct costs, which means your gross profit can be quite high. If you sell physical products, gross profit becomes a very important measure. It tells you how much money is left after covering the cost of what you sell. If that margin is small, the business has very little room for error. Any increase in cost would quickly wipe out profit. So gross profit tells you whether the thing you sell actually works as a business model. The third number is net profit. You may have heard the phrase turnover is vanity and profit is sanity, and this is exactly what it means. Net profit is what's left once all the costs are taken away. So the calculation's gross profit, take away overhead costs equals net profit. Overhead costs are things like insurance, software, marketing, rent, accountancy, and all of the other costs involved in running the business. The number tells you whether the business works overall. You could have a business turning over hundreds of thousands or even millions, but if there's no profit left at the end, the business isn't actually viable long term. Profit is what allows you to pay yourself, reinvest, and grow. You can also look at net profit as a percentage. This is called net margin. Net margin simply shows you how much profit you keep from every £1 you sell. For example, if your business sells £80,000 and makes £20,000 in profit, your net margin is 25%. That means the business keeps 25p from every £1 that it sells. As a rough guide, around 10% net margin is often considered a healthy benchmark for a business. Less than 5% can be quite vulnerable, and margins of 20% or more are usually considered very strong. Even if you're not pitching to investors, understanding this gives you some useful context about how your business is performing. The final number to understand is cash. The full saying goes, turnover is vanity, profit is sanity, and cash is reality. Businesses don't usually collapse because they aren't profitable. They collapse because they run out of cash. Cash flow includes things that don't always show up clearly in your profit figures. Things like loans, VAT payments, outstanding invoices, and financing. If customers aren't paying you on time or if large repayments are due, cash can disappear quickly. Even large companies have collapsed because of cash flow problems. So understanding the cash moving in and out of your business is incredibly important. At the simplest level, you need more cash coming in than is going out. So in conclusion, you don't need to be an accountant to understand your business numbers. You just need to understand the numbers that actually matter: revenue, gross profit, net profit, and cash. Each number on its own tells you something, but together they paint a much clearer picture of what's happening in your business. They help you answer important questions like, is this working? What needs adjusting? And where might profit be leaking? Instead of feeling busy and hoping things are going well, numbers give you clarity. And when you have clarity, you can make better decisions, because clarity creates control. If you'd like more support building a calm, structured and profitable business, you'll find additional articles and resources in the link below. And if you found this helpful, subscribe for weekly practical support for small business owners.